Everyone wants to get rich in a bull run, but the problem is that most people have a hard time saving money to invest in Bitcoin. They think they need to buy a whole Bitcoin at a time or set aside huge amounts of money in order to make big buys. But there's one strategy that actually consistently outperforms others when it comes to buying Bitcoin and other assets. And lucky for you, I'm going to tell you exactly what it is, how you can take advantage of it. Warren Buffett's doing it. Will you? Let's get it. Welcome to BitBoyCrypto. If you would like daily crypto videos, make sure to hit that subscribe button to become a member of the Bit Squad. If you would like to learn more about crypto or trading, then please make sure to join one or both of my Telegram chats, the Bit Squad or Bit Squad Traders. Alright guys, today we are going to be discussing an investment strategy very in depth that most newcomers to crypto do not know about. You see, your average new investor into crypto doesn't have the same kind of financial background that new stock investors have. People who invest in crypto are just regular folks like you and me. The reason for this is because you don't need to have $2,500 to open a Bitcoin wallet, the way you have to have big chunks of money already set aside to open a trading account with a Wall Street brokerage. You can buy just a couple of bucks worth of Bitcoin and get started on your crypto journey. The bar for entry into crypto is much lower than investing in stocks or funds, and this is a good thing. This allows anyone who wants to be part of this financial revolution to get their foot in the door. Wall Street is for elites who are constantly trying to shut the door on newcomers or even middle-class citizens. Crypto is an open ecosystem and environment where inclusion is the name of the game. New crypto investors, though, often don't know what they are doing and have a huge list of questions. One of the most common questions is, do I have to buy a whole Bitcoin? No, of course not. You can buy up to 1/100,000,000th of a Bitcoin. Of course, nowhere's going to actually be able to sell you that low of an amount because it's only a small fraction of a penny. But you can buy $5 of Bitcoin and maybe even less on some sites. But buying $5 worth of Bitcoin is not going to get you very far. I mean, if Bitcoin hits $1,000,000, you're only going to have $500. And heck, $500 is a good chunk of change in some places in the world. For most Americans, that will barely pay 1 month of your car payment. But what about instead of investing $5 into Bitcoin once, you were to do that multiple times? Let's look at the power of compound investing, where you take a certain amount of money and put it into an asset on a schedule. Even with that $5, if you were to invest $5 in BTC from your weekly paycheck for an entire year, you would have $26K. Whoever told you $5 won't get you far? Even a measly $5 per week that you spend on coffee or Pokemon cards, I see you nerds, could net you 26 grand in one of the most bullish scenarios for Bitcoin. In a video a couple of weeks ago, we actually discussed the most bullish scenario for Bitcoin, and it's pie in the sky moon boy stuff, but that prediction put the top end of Bitcoin at $10 million. Okay, so in our weekly $5 Bitcoin buy example, that would net you a cool $260K just for the price of a Starbucks frap every week. You see, this compound investing strategy is called dollar cost averaging, or DCA for short. We're going to get much more into DCA, the strategy itself, and the best practices here in a few, but if you're already sold on this kind of strategy and want to start making regular buys straight from your bank account into Bitcoin, you can use my side of choice, Swan Bitcoin. Just visit swanbitcoin.com/bitboy to get started, and you'll get $10 for free in BTC just for making your first scheduled Bitcoin buy. And hey, when Bitcoin hits 10 million, that's 10K just for free. Only Bob Barker could beat that. So what exactly is DCA? According to Investopedia, dollar cost averaging is an investment strategy in which an investor divides up the total amount to be invested across periodic purchases of a target asset in an effort to reduce the impact of volatility on the overall purchase. Dollar cost averaging is also known as the constant dollar plan. Okay, so there's so much more to this to unpack than simply throwing money at an asset on a scheduled basis. DCA takes into account the volatility of an asset. You see, if you just sit around all the time waiting for Bitcoin to dip in order to make a purchase, then you're going to get burnt a lot. However, you may have the opposite problem. You may be known for having a terrible case of the FOMO, and every time you see a project pumping, you get an itch to get in just in case this is the time Bitcoin finally gets above 10K and heads to the moon. But of course, every time you invest, the price plummets and you lose. Sounds like me. The fact is, some people are just too emotional about investing, so they invest at the wrong times out of FOMO. On the opposite end of the spectrum, some others are too fearful to get in, thinking the price will always drop more and they miss out on big potential gains. Dollar cost averaging solves this problem because it is able to help you find an even keel between fear and FOMO. Every single week or month or whatever time increment you choose, you just buy Bitcoin. It doesn't matter if it's a bull run, doesn't matter if it's a bear market, you just buy. It's a stress-free strategy for those who opt into this method. People who dollar cost average are looking at their investments in terms of years, not days or hours. This is not a method for traders. This is a method for hodlers. If you believe in Bitcoin, then taking advantage of DCA strategy shows you are in this for the long haul. While everybody on Twitter or YouTube may be panicking, looking like Chicken Little saying the sky is falling because of a giant red candle, the DCO folks are cool as a cucumber, focused on what is yet to come, not what's in my thumbnail. They're not focused on the here and now. This strategy takes the volatile curve of Bitcoin and flattens it. A dollar cost averaging strategy will allow you to build wealth over time. It's not about getting massive gains from this pump or that pump. It's about the overall upward trajectory of an asset like Bitcoin. Anyone who knows where Bitcoin is heading in the long term understands that it's going up over time. It will have mountains and valleys, but just look at the all-time chart of Bitcoin. Notice one thing, in spite of the peaks and the troughs, the chart has consistently moved up and to the right. That's exactly what we want to see. The fact is, no one can time the market perfectly or exactly. If they could, then that would be the richest person in the world. They would get every call correct. But we understand this is not reality. So this investing strategy takes your weaknesses as an investor, kicks them to the curb. Now think back to the example I used earlier in the video, and let's apply it to whatever financial level you're at. Imagine if instead of $5 per week, you were able to contribute $20 per week, or $100 per month, or $1,000 per month. Over time, those investments would reap huge rewards, and many of the most savvy people on Wall Street even would tell you that dollar cost averaging is the strategy many of the most elite people on the planet have used to not only build their wealth, but maintain it. In fact, famous billionaire investor Warren Buffett was taught all about DCA from his mentor, who taught him the ropes when it comes to investing. Buffett's mentor was Benjamin Graham, and he understood this strategy. This powerful method was passed on to Warren Buffett, who many times has said that for the majority of investors in the markets, dollar cost averaging into low-price S&P 500 mutual funds was the most optimal way to beat the markets and build wealth. And I'll let you in on a secret. Come here. If a billionaire is giving you investment advice, you take it. And while Buffett refers to DCAing into mutual funds on Wall Street, and I'm talking about using this practice to stack sats for Bitcoin, we're both correct. This is a strategy that works on literally any investment or asset class out there. The dirty little secret about investing that most people don't know is that the people who trade and jump to make moves quickly on the market usually lose. There is a reason HODL became a meme. It's a strategy that's worked for those who have stuck it out. Of course, with HODLing, you ride it all the way up and all the way back down. But I'll tell you this, people who've HODLed since 2012 or even 2014 are still sitting in the catbird seat with gains so massive, most of you can't even imagine it. People who've been dollar cost averaging into Bitcoin since the early days are millionaires by now. But here's the thing, in 10 years, right now will be considered the early days. And you certainly don't want to be one of those people kicking themselves for not buying more Bitcoin and stacking more sats. And dollar cost averaging allows you to do that without a lot of risk. So remember, if you want to take advantage of this strategy, I suggest heading over to swanbitcoin.com/bitboy to get started and get your free $10 in BTC. There's no amount too small or too large to get started. The important thing is that you just get in the game. But now it's your turn. What do you think is the optimal investment strategy when it comes to Bitcoin? Have you tried dollar cost averaging your way into building wealth? Make sure to drop your comments below. I hope you enjoyed this video. If you did, please make sure to smash the like button and hit subscribe to become a member of the Bit Squad. Thanks so much for watching. Have a blessed day. BitBoy out.